Hello, personal finance students. This is Brother Bingham, and I welcome you to week 10, where we're going to learn more about specific asset allocation. We've done some work already on investment objectives, on asset allocation, and now in week 10, we're focusing on ensuring that we have the right allocation. I know that in weeks past, there have been some questions about certain ways that you fill out the spreadsheet. And so I wanted to maybe just demonstrate what we're looking for this week. So if you think about last week's assignment about investment objectives, you set objectives based upon time. So if you had a long time before you needed the money, you would put a growth objective. Short time, it'd be a capital preservation objective. Well, here we're going to talk about allocating your assets. So up here at the top, it is your investment dollars, the percent of investments that will be in stocks, that will be in bonds, money markets, and then other investment categories. And so you can do it now or as you begin your career. So if you're young in your 20s, then one would think that the majority of your investments would be in stocks. You might have a little bit of bonds and some money market depending upon your risk appetite. However, to get that long-term growth, you'd want a lot of your portfolio in stocks. Obviously, if you're closer to retirement, well, the inverse would be true, where you'd have more bonds, more money market, and less stock. So this needs to total 100%, because it's 100% of your investment dollars. Again, think about your investment dollars. Now here at the bottom is where we begin to have a little bit of fun, where you begin to select specific investments regarding your objectives. So at the top, you may have, last week, you may have said, like here's an example down here, you may have said, okay, I have a growth objective for retirement in 2057. And so 55% of that is going to go towards that. Well, okay. Now, what specific investments within that growth objective are you going to invest in? And so here they're laid out as an example. The first growth stock is Facebook, and 20% is going to go to Facebook. The second one is a mutual fund called the S&P 500. There's several that you can go and find, but I'm looking for a specific fund with a ticker. So this actually isn't a good example. They put S&P 500, but I'd want the ticker. What specific mutual fund that measures itself against the S&P 500 will you invest in? Again, that's stocks. The third one, growth, is FLGEX mutual fund. Again, there's the ticker. It's specific, and it focuses on stocks. Then you can see the income objective, which down here we don't have an example of, but we do have an example of capital preservation. And this individual is selecting about 20% between these two things for capital preservation. And they're choosing to use a Vanguard money market fund for the capital preservation. And so again, it's important that you go and find specific investments. This is a good example in that it has Vanguard, but I would want the ticker, the stock ticker as well. So you get to do a little bit of investment, a little bit of research on your investments. You can put as many lines as you need within each objective. So within a retirement objective, you might have these three. You might have 10. You might have 15. You might have 2. You might have just one good mutual fund. But make sure that you're specific in your investments. So a little bit of research on different websites can help you to achieve that. Over here, I guess I would just say that this is the percent within the asset category. And so you'd want this to within the stock category, that's 20%. So if I take all my stocks together, you'd want all the stocks to equal 100%. Because again, now we're talking about how are we allocating ourselves across the asset categories, stocks, bonds, mutual funds, etc. And so because these are stock mutual funds, they would be stocks. Here's this particular bond investment is 100% of the bond asset category because there's only one bond that you're choosing. The same with the money market asset category, 100%. So you'd want the stocks need to equal 100%. All of your bonds need to equal 100% and money market 100%. I hope this helps in the lesson for this week. I did want to just share quickly. I like to share personal examples. So this is my 401k at Wells Fargo. Obviously, I'm not going to show a balance, but I do want to show my percent of allocated assets right now. Now, I'm not sharing this because I think it's the right way to do it, but just to show you how one can be allocated across several assets. Even though I'm 42 years old, I still consider myself to be young. I have 25 years before I'm going to really need the money, 23, 25 years. So I'm all in on stock, right? I choose, I have a high tolerance for risk. The market can go up and down and it doesn't really affect me because I know I have time. And so I've chosen to allocate my assets across stock, but across different asset classes within stock. So I have large cap. So it's large companies that have lots of money. I have a S&P 500 index fund. I have large cap growth funds, which grow over time. I have some small companies because I'm expecting those to rise. I believe in being offshore, and so I have about 25% of my stuff in emerging markets offshore, and then I have about 10% in the NASDAQ, which of course, as you know, is technology stock. Again, I hope that just gives you an example of what you could do to allocate your assets across the different asset classes. All right, students, I hope everything's going well. I hope this has been a good week. Take care. Bye.